Hi, everyone. I'm Dr. Shamim Nazir. Welcome to the Doctor Investor Podcast. Today we have Arthur Weissman, the CEO and founder of Industry Fintech, which is our third-party fund administrator. And I've invited him on to share a little bit about what does Industry Fintech do and how it helps us in our raising capital and investing in real estate. So, Arthur, thank you for joining us today.
It's a pleasure to be here, and thank you for inviting me.
So tell me a little bit about yourself, or tell our audience how you got started, where you were before Industry Fintech.
Sure. So look, we created Industry Fintech, myself and the team of people that created it, to solve what we felt was a problem in the industry that we solve. See, all of us who were the founders of our company were serial entrepreneurs, and we had to spend our time raising capital, dealing with investors, going through compliance, things that most people don't deal with on a daily basis, right? Most people, like yourself with MedInvest, you focus your time on finding great investments, speaking with investors, tracking your investments, and then hopefully things will execute as you planned, and all goes well. So not everyone becomes an expert on capital raising, on investor management, on compliance, on reporting, all those things that happen. Everyone just gets excited when you find a great deal, you find a great investor. But there's so much else out there that needs to get done. So our frustration, like many companies, are formed based out of personal experiences. So was our company was formed the same way, right? So we were formed out of our personal frustrations of not only having to go out there and have great ideas, find great investors, get the investors to decide this is good for them, but also then managing and maintaining everything else. And we realize that if we have that challenge, how many other people have the challenge? And then even though we are entrepreneurs, maybe starting companies or looking at one-off deals, there's fund managers, there are SPVs, there are other startups, private equity firms, lots of other VC funds, lots of others that experience this. In fact, private capital, just in the Reg D offering, represents almost $3 trillion a year is raised. I mean, the only thing bigger than the Reg D market is really the US government issuing bonds, and yet everyone in Reg D had a similar problem we had. So we created our business. Industry Fintech is a very simple business. When you think about it, we've built a platform of technology, of automation, and compliance. It helps any firm or fund or person from the moment that they decide they want to find investors, to finding the investors, to when the investors say they're interested, to onboarding the investors, following compliance, managing the investors, managing the offering, and even managing the entity all the way through the cycle. All these things have to be done. They're not something that should be done. They're not something that people can have different ways of doing. Once you have an investor, there's a right way and a wrong way to operate. And all we've built was proprietary technology integrated into that workflows based upon best practices. And then all of it is built around the compliance requirements that all of us that have investors required. So with the Industry Fintech platform, firms like yours, MedInvest, can easily go out and create new offerings, can easily onboard new investors, easily manage those investor relationships, easily do reporting, statements, distributions, all while knowing that everything that's occurring is occurring meeting the compliance requirements, being performed by a third-party firm who's trained and experienced at this, all the while with full visibility through the technology for you, the investors, your stakeholders, regulators, anyone that would need to see this information to have access to it. So if you want, I can kind of give you an example of how this works.
Yeah, of course. Let us
Sure.
know.
Okay. So, look, Shameen, you and I have known each other for a while. We enjoy our professional relationship, but also all the people here are big fans of yours personally and what you've built and how you're doing it. So, we like to work that way. We like to work with those people that believe what we believe, and what we believe is that there is a right way and a wrong way to operate. And while none of us have a crystal ball, none of us know which investments will do phenomenally well, which ones may not turn out to be as good as we hoped, and which ones may turn out to be duds and unfortunately aren't great. When you're working with great people who also embrace that there is a right way to operate, and you want to, not only operate that way, but appreciate that that helps you be more successful in the long term for everyone. We provide the type of services that people like yourself can appreciate. So an example of that would be your MedInvest income fund, right? I remember when you had the idea for your MedInvest income fund, and we talked about that. And we love the fact that you were embracing the right way to do it, right? Many people have income funds. There's many of them out there. They've been out there for decades and decades and decades, big companies, small companies. But you set yours up in a way that followed the rules, was transparent, made sense, and then actually, takes capital that you're raising from investors, and then also following protocols and processes to ensure that, again, that money is invested as you kind of are sharing with people and indicating to people, and also tracking that and then making sure as the money comes back, it goes out to everyone. So we work with you, as you know, to not only help you get up and running and get into a deal room and launch your Invest Secure button and get accounts set up, investor portals, but more importantly, we help you even as you find investments that you want to invest in, right? So I know you've come to us and said, hey, I found an investment here that I like, or I found a sponsor, or I found somebody that was introduced to me that I think may be interesting. And you always do the right thing and say, hey, Industry Fintech, what do you think? Now, we're not here to make the decision. We're not allowed. We're not here to tell you what to do. We're not allowed, but we are here to be your support, right? So that's our goal. As you find these opportunities, you send over the information, we take a look, we try to understand and distill that information so that we can give back to you an analysis, something that's organized in a way that's easy, to understand the facts and the details, and then we give that back to you, right? So that you can make the ultimate decision, based upon understanding the terms, the scope, potentially what could go well, potentially what could go poorly, and then you make the decision. Now, do you make that decision on your own? In the big picture, no. We're here to support you, plus any other, your lawyers and your tax professionals and others you have. But as most people realize, the old saying, it takes a village, right? It's impossible for any one person to find one investment opportunity, to understand exactly what it is, to then decide what's right, what's wrong, make the decision, feel comfortable about the decision, execute on the decision, and then sit there and support it. It's impossible. No one can do this. I don't care how sophisticated or experienced you are, it's impossible. So your ability to embrace working with Industry Fintech as your administrator helps provide you, so much of the support and tools so that you are making a final decision based upon objective information, facts, and details. Now, does that mean every one of your investments are going to do great? We don't know. Now, luckily, so far, so good, and you've been very thoughtful in who you've been working with, and you've been taking what I feel is a rather conservative approach, which is a good thing. But if something does become an issue, if there is a challenge, we're also here to help you with that. So we're here to help you work with wherever you've invested your money. If we can help to go through a workout or to understand where the challenges are, or to, if something does go wrong and MedInvest ends up taking over responsibility for an underlying asset, we're here for that as well.
Very interesting. And then you mentioned your proprietary platform. Is that the Tribexa? Is that what you've created?
Yeah, so we've created our own technology to support what we do. We didn't create the technology because it's super secret. We didn't create technology because we have the top AI people on the planet. That's not who we are. That's not what we're trying to be. Just the opposite. We created our own technology because in order for us to do what we wanted to do, our why, our reason for doing what we do, we wanted to be able to have a couple of things. One, we needed a platform, something that was fully integrated together. Two, we wanted that platform to be built to meet all of the rules that are required. And then thirdly, we wanted to build in what we found to be industry best practice in terms of workflows. Why? Because by having a proprietary platform, which has taken us years to build, by having that proprietary platform, it allows us to work not only with you and MedInvest, not only with the MedInvest Income Fund, but with hundreds and hundreds of other clients. And yet with our own technology, we're not in a situation where as we bring on more clients, we have to go out and buy more technology, charge even more money, and we don't really solve a problem then, right? What we wanted to solve was to make something that was accessible for anyone that's going to have investors, so that all investors have an opportunity to know that whoever they've invested with can have an infrastructure that's accessible and affordable, but most importantly is compliant. So therefore, by building our own technology, we're able to create the efficiencies and be able to scale while still maintaining full compliance requirements, while still building out the automation, and while still providing the transparency and visibility that, let's just face it, we don't see in other systems that are out there, not because others are trying to hide things. It's just that most everyone else in the industry is either pieced together something or they're only solving a portion of the problem. And we feel that the only way to really provide value is to provide that transparency from beginning through the middle to the end, all integrated together, meeting all compliance requirements, regardless of any industry type, any offering type, any investor type, all in one place.
Yeah. Speaking of which, which industries are you guys currently servicing? Like I know it's real estate, and then
yeah, let me tell you about what we're seeing, who we're servicing, what we're seeing, and I think it gives some insight to you and anyone listening to this and what's going on. One of the great things about building a platform around supporting any type of offering, trying to lower costs, accessibility, affordability, is we see a lot more deals than many other firms do, right? Most other firms, and there's nothing wrong with it, many other firms are trying to do more custom, more high touch, more expensive, and therefore they have less visibility to, to see what's in the marketplace. They may understand real estate, or they may understand venture capital, or they may understand billion-dollar funds, but we see across everything. So a couple of things I think important is, yes, we do a lot with real estate. And the reason we do a lot for real estate is because when you look at the number of firms out there raising capital, real estate firms are constantly raising capital, probably more frequently than any other type of firm. Why? Because real estate deals, there's hundreds of millions of them out there. There's always another real estate deal, and the deals can be small, they can be large. Not as many venture capital deals, not as many even private equity deals, not as many private debt offerings, but with real estate, there's a much larger scope. And real estate, because it's tied specifically to economic cycles, and it's tied to interest rate sensitivity, and it's also basically tied to the general economy, we feel that not only can we embrace real estate as a way to help as many projects and investors as possible, but also so we can get a really good gauge of economic conditions, the general economy, as well as interest rates and where people see them going. So basically what I'm saying is, by working with real estate, we use that as our canary in a coal mine, so to speak. We use that as an indicator across the overall economy, because what we see in real estate sometimes is an early visibility into what you'll eventually see in venture capital, or you may eventually see in private equity. So what we're seeing right now is probably a pickup, right? During COVID, we had probably the best years of our business as interest rates dropped and more people were looking to do investments and deals. As interest rates went up, as a result of all the things that were done to try to address and support the economy because of COVID, obviously law of unintended consequences, all the things done to try to help protect the economy, as we all know, kind of created this high interest rate, high inflation rate. And then we saw many of our real estate clients have some of the worst. We had some of the two best years we've ever seen, and some of the two worst years, for our clients at least, we've ever seen. Luckily, we did pretty well. But what we saw from that was the sensitivity of private capital to not only the interest rate environment, which is a reflection of the general inflation and general economy, but that we saw it happen so quick. So in the last, 60 days, not just since they announced that they're lowering interest rates, but since the end of the summer, when the Federal Reserve clearly communicated that they were going to be lowering interest rates, just not explaining how fast or how much, we started seeing a big pickup. Why? Because look, the stock market's at an all-time high. It may continue to be an all-time high for a while, but how many years can you be an all-time high year after year after year? It's like winning the Super Bowl year after year after year, or winning the World Series. It typically doesn't happen every single year. So as people, I think, are seeing the stock market, which everyone can participate in, start to continue to hit highs and continue to do well, they're starting to then also see that it's maybe time to take some profits, some chips off the table, to diversify, which is always, anyone that knows me knows I love to talk about diversification. Is probably one of the key factors for success, not only in ensuring your risk management, but also ensuring that you're not going to miss out on potential opportunities. And so I think what we're starting to see now is this cycle effect. This, as the regular stock markets and the public markets, continue to hit highs and maybe justified, maybe not. We're seeing the cyclical motion of money coming out of those markets and starting to look again into private capital markets, mostly in anticipation of these rates lowering. So in the last 60 days, we've seen more activity than we have in the previous 10 months. So therefore, we only see this thing going forward. Again, canary in the coal mine in a good way, right? We're an indicator. We're the beacon of light that's here to say that for people like you and MedInvest, you should start to see even more activity and more demand. And for your investors, they should feel comfortable that those who are looking at these what are called alternative investments, will continue to see more offerings and continue to be more active, which, by the way, is what we hope and what we like.
Yeah. So tell me a little bit about your background. Like, what did you do before Industry Fintech that makes you so wise?
So, this industry, working in private capital alternative investments, the funny thing about it, and I try to share this with others, is that it's a learned expertise. So there really is no undergraduate degree in alternative investments. There's no, there's no like course, and you and I have spoken about this. There's no like course I can take online to go get, to become an expert. Yeah, I'm sure some people may now have some certificates or textbooks, but the only way to learn this business is to learn the business. And I think the best way for me to explain it and for others to understand this, especially someone who, to you like a doctor, look, you can read all the textbooks you want about medicine. You can go to all the classes you want, but to become a doctor, you have to go out and practice medicine. To be someone adept in alternative investments, you have to go practice being in alternative investments, which sometimes is not that easy. Our firm happens to have a very robust internship program. We bring high school kids through and let them learn about what we do and let them actually play around and start their own offerings, in demo mode and see what it's like to do that. We're also very active and we prefer to hire younger people that want to learn the business. We're not big on hiring people with 20, 30 years experience just because they may or may not know the business. My background was two things that I did. I've done many things in my life, but two things I've done that got me prepared for this. Number one, I was very lucky that someone I knew and many years ago recruited me to come work at Citigroup. I did not have a finance background, but they gave me that opportunity to join Citigroup and learn about investing, to learn about capital markets, to learn all the things that I kind of know today. And I'll forever be in debt to that person because if it weren't for them, how would I have ever learned this? And then two, after I left Citigroup, I went and became an entrepreneur myself, a fintech entrepreneur. Industry Fintech is my third fintech startup that I've been affiliated with. And it was that experience of being an entrepreneur myself and having to go out and raise capital, having to know what to do with the capital, how you handle your investors, report on that, while learning about finance and capital markets while working at Citigroup, gave me the opportunity to realize that I didn't know what I didn't know. And then practice, practice, practice. So as I always jokingly say to people, yes, we've been in business for almost 8 years, and one day soon we'll become an overnight success, right? Because it takes a long
That's
time
what they
to
say.
learn these things. Just like being a doctor, you can be a doctor for years and years, and one day all of a sudden you become the expert doctor or the one that everyone refers to that
That
you
one
should go
that does
see.
the life-saving procedure at the right time.
Exactly. That you just somehow didn't learn from reading a
Yeah.
textbook. It's not the way it works. So, um, I can share my background. It's not really that exciting. I think what I'm just trying to share with you and other people should be aware of is if you are interested in alternative investments, if you really get excited about, hey, how can I deploy capital? And seeing that capital being deployed in alternative investments typically has a direct effect on the economy, meaning when if a real estate firm is going to go buy an apartment building, they raise $5 or $10 million of equity. They buy the building. First, you have a broker that sold it, a broker that helped buy it. You get mortgage people that are involved. You're going to have due diligence people. You're going to have contractors. Once you buy the building, you're going to hire a bunch of workers to go in there and fix things. Then you're going to hire people to manage it and maintain. I mean, these things really not only have an opportunity for investors to make money, but you can see directly how that capital that's raised goes into being into operations, into something else. Meanwhile, if I took $1 million and bought stock in, companies such as Oracle or Microsoft, I may personally make some money, but just because I bought stock in Oracle or Microsoft doesn't mean Microsoft or Oracle have hired more people. Just the opposite. They don't even know I bought their stock. I bought their stock from someone else. So therefore, private investing actually gets capital directly into the economy, whereas investing in the stock market is something where money is being transferred from one investor to another, not having any type of positive effects into the economy directly, maybe indirectly, but not directly. So, one of the things that again, as I was sharing, if you're the type of person that likes to invest, gets excited about the impact that's made in these private investments, and also really likes, the last thing that's so important about this, the fact that you're directly connected, through the investment to the business, to the underlying opportunity. So when someone invests in a property, you can go see the property. If I invest in a biotech startup, I can go see the products they're developing. If I invest in a private equity fund, they'll share with me all the companies that they've put capital into so those companies could hire people or build products or somehow grow. So, I always say to people, if you want to get into this industry, the best way to get started, just start. See how it goes, learn, start small, start safe, let it grow, get better, get more experienced. And again, maybe in 8 or 9 years, you too can be an overnight success.
But tell us what, I see a lot of physicians and other people raising capital without like a third party fund administrator. And what do you think about that?
So let me go over that and real quick, only because unfortunately I'm short on time, but we can love to be invited back again, and we can do more topics. So look, whenever you're raising capital from investors, you are not required to have a third party administrator. You're not required to do many things. That's why we started our company, right? Because when people are not required by law to do things, but perhaps should be doing these things because it's in the best interest of success, in the best interest of compliance, is in the best interest of transparency. And so all those things would be in the best interest of investors. That's what we are, right? So as a third party administrator, our clients, including you, are not required to use us. So what we do, however, is we provide the compliance and the platform as I kind of shared to help you sleep at night, to help your investors sleep at night, so that you, your investors, your stakeholders can know that there is a third party there trying to ensure that everything is occurring correctly, keeping an eye on what's going on. We don't control things. We're not here to tell you what to do. We're not here to stop you from doing what you will do, but we are here to give guidance and insight. Again, as a doctor, I think you can appreciate it. Someone comes to you, they entrust their health with you. You can tell them what to do. You can keep an eye on them. You can help give them prescriptions for success and health. But at the end of the day,
They
they
don't have
leave
to do it.
and they leave, and you're just fingers crossed going to do it. In our world, we have a little bit more control because we can do things such as escrow accounts, and we can control payments, and we can control the flow of money. That definitely helps. But at the end of the day, we're not here to take control. We're here to help ensure that there's just a preset rules that are followed, that all stakeholders, from investors to the managers to the outside people, can understand what's happening. Do mistakes happen? Absolutely. Do investments sometimes, not go as hoped? Absolutely. But as long as everyone knows that the rules are being followed, that the processes were there, and that nothing was being hidden, hopefully everyone could feel safer, have more trust, and go from there. So I do apologize. I want to thank you so much, Shamim, for inviting me today.
Yeah,
I
of course. Yeah, absolutely. Thank you so much, Arthur. Appreciate your time.